It doesn't have to be interest rate driven, low interest rate, high interest rate. It could just be from an emotional standpoint, feeling more comfortable by having that debt paid off.
How would you like to own your home outright? What would it feel like to never make a mortgage payment ever again? On our mortgage-free segment today, we're going to interview Larry Sprung from New York. Recently, Larry and his wife, Denise, became mortgage-free. Today, we're going to learn how they accomplished this family financial goal and what they're doing with their money now. Welcome to the show, Larry.
Hey, thanks for having me, Andy. Pleasure to be here.
It's awesome to have you, and I look forward to learning from you on this big family win. Let's start off with our mortgage-free 3. These are quick, short answers to help people understand what you did with this mortgage-free process. Let's start off with the first one. What was your starting mortgage principal balance?
It was about $230,000.
$230,000. Awesome. And then how long did it take you to pay off $230,000?
Around 12 years.
Around 12 years. Awesome. And then what is the home value today?
Let's say about $1 million.
That is incredible.
We just have to find one person that will pay that much, right?
Exactly, right. It sounds like fantasy money when you say it out loud, but you own a $1 million mortgage-free home. Is that correct, sir?
That
awesome,
is right.
Larry. That's so cool. Congratulations. Very, very cool. Now, talk to us about why you wanted to become mortgage-free in the first place.
Well, I think it's just, one of those things that, you have this home, you take a rather large mortgage, and, depending on where you live in the country, you may not think that was the 230 was large for you, or it may be humongous for you, right? Depending on how you look at it. We were lucky enough that we're living in our second home, and our first home, we had about the same mortgage, but our house appreciated so greatly that we were able to use the monopoly money from that sale to put down on this home, which, helped us keep that mortgage payment and borrowing amount, roughly the same, which was awesome. And we just felt like there were other things that we could do with those funds. And really the whole impetus behind paying it off early was to kind of pay it off at around the same time the kids were going to start their higher education. So we could have some extra money to help defray those costs, because we felt like the likelihood of us getting any type of financial aid was probably slim.
Got it. So with that extra margin you have now that the mortgage is gone, that helps to make these college tuition payments.
100%. And, in full disclosure, we have 2 kids that are college age. One son is in college. The other son is playing junior hockey right now, basically for the next couple of years. And he's committed to a Division I university where it's an Ivy League, Brown University, where they don't give any scholarships. So we're going to be paying for that education too in the next few years here.
Well, I love this conversation because this is a great plan. There's some thoughts out there that you would then, use your home equity to pay for college. You guys have done the opposite, where you say, hey, let's just pay off the home. And then with the reduced payments that we have to make now, we can have a little bit more flexibility with higher education. I love this. Talk to us about the process of eliminating this mortgage over time. What did you guys do? Did you increase income? Did you reduce expenses, or was just a long-term plan to pay this thing off? Talk to us about the process.
Yeah, it was really just a long-term plan. We ran a few amortization schedules to see what amount we would need to pay on a monthly basis in order to have it paid off roughly around the time that our first son went to school. We ended up being off by about 1.5 years or so in terms of exactly hitting that number. And I'm not sure if that was a miscalculation on my part of years, but either way, we just figured out what that amount was. We started paying that each and every month, and allocating whatever we were going up and beyond the mortgage amount. We were just allocating and making sure that the bank was allocating that to principal only. So we were, knocking down that amount much more quickly as a result.
Got it. And so these were additional principal payments each month. Is that how you did it? Or were these biweekly payments? Okay.
Yeah, it was each month. I just added on several $100s each month to pay it off a little bit more quickly than we would have, just making the regular payments, obviously.
And then talk to us about that plan. Was this budgeted each month for you guys, saying, hey, we're just going to throw another couple $100 at it? Or was this newfound money? Did you guys sell stuff? Did you have side hustles, or or these bonuses or tax refunds, or was just this was part of the plan?
For us, it was just part of the plan, part of the budget. When we were calculating calculating the budget for the house and we were looking at making those payments, like I said, we ran that schedule and we just made it a part of our life where it was just automated. The payments went out every month. We didn't have to touch it. We didn't look at it and we didn't change it. So it just was on autopilot as much as we possibly could.
That's incredible. And then talk to us about your general income during that range, during that time frame, from the beginning and then to where you guys are today.
Yeah, I mean, the income really ranged significantly because when we started this journey, I had my company that I was building. My wife had her own company. And in between, somewhere between buying the house and paying off the mortgage, there was an intersection of the two. And my wife ended up leaving her career and became the director of marketing for my firm. So it kind of got intertwined. So to some degree, the income itself really didn't matter because we just budgeted for it. So we were going to make that payment regardless. And we set it up in such a way, even the original mortgage, I would say this, I'll share this story. When we went for the original mortgage and I sat down with my accountant at that time, money was very cheap and inexpensive. Housing prices were going bananas. And he was like, you should really double your mortgage. You should go from around a 225 to 400,000 or 500,000. He goes, you guys can swing that. And I said to him, I said, you know what, we could, but me owning my own business, my wife owning her own business, we don't, you never know what's going to happen. And we knew that this mortgage payment we could make in our sleep, no matter what happened. We had the ability to do it. So the income really wasn't a driver in making sure we could do it because we budgeted in such a way that it would never be a problem, even if things went backwards.
I love that. Now, with being sort of double business owners, you guys obviously are thinking about protecting that, making sure it lasts a long time. Is something like a mortgage-free home almost like an emergency fund for you where you're saying at least the house is paid off even if things go awry in our business? Or are there other things you're doing as business owners to sort of protect the back end to make sure you're feeling comfortable?
Yeah, I think the latter. I mean, we have a number of different avenues that we're taking to help solidify our financial future, right? And, having that house and having the equity built up, is important and it's there as just in case, but we have other methods and means that we've also kind of surrounded ourselves with to help make that protection even better. Because you don't want to really, if you tap into that equity, you use it, you got to pay it back. So you got to plan for that. So if there are other ways for us to handle it, it's helpful. But one thing I recommend to people, even prior to paying off a mortgage, it's really important to have that home equity line of credit in place. I find it very helpful. I've had one in both the houses I've owned for 20 plus years. I've had one available. I've used it the equivalent of 2 or 3 times, once to help out a family member as a bridge loan, once to help out myself. But it gets very rarely used, but the whole idea is when you need it, it's not there. It's harder to get, right? If you have it in place before you need it or have a desire to use it, it's much easier to have that as a protective feature there for you.
Got it. Well, let's talk about post-mortgage freedom here. How did you guys celebrate? Were anything different for you after that? How are you guys using the money now? Is it strictly for college purposes? Talk to us about that.
Yeah, so we didn't celebrate. There wasn't any big party or anything. I guess maybe there should be. I'm very. If you ask my wife, I'm very bad at celebrating wins.
We're here to celebrate you today, Larry. It's just so you know.
All right, thank you. I'm usually like, okay, done. What's next, right? That's
right.
kind of my philosophy. But one of the things that I've set up since post mortgage is, one, I have an auto transfer every month to a savings account to pay my taxes and insurance, which I kind of always had because we never escrowed taxes and insurance. I'm a big proponent. I don't believe in it. I'd rather have control over that. So we continue to make that transfer each month. So we have the money for the taxes and insurance when those bills come up. And then, the money right now is going towards that college education and also supporting both the boys. Because if you have younger kids, I would argue and let you know they become more expensive. They don't become less expensive. They become more expensive over time. So be prepared for that. And that's really where those funds are being allocated to. Maybe even I could say I'm paying my son's rent right now at school. So it's almost the same amount as our mortgage payment. So
I love that. And as you're talking about that, I've got a 10-year-old and a 12-year-old right now. And you're saying things get more expensive. When does it start to slide down then, Larry? Is this 25, 27? What are you projecting? Like when are they off the payroll?
Mine are 21 and 18. So I'm expecting the 21-year-old, he's probably got another year or two before he finishes up school and, has a very good job. My younger son will have to see. He won't be starting college till he's 20. So he's going to be a little bit late, but that's the life of a hockey player. But we'll see. Listen, stay tuned. Maybe have me on in another 5 or 10 years and I could give you an update. But listen, for me, the sooner the better if we can do it.
I was going to say, that's the investment you're making now. You're investing in that college education so that they can get off the payroll, right? There you go. Absolutely. Talk to us about that financial education that you've imparted on your children too. I'm sure a lot of these conversations are happening at home. I'm sure they're aware of, some of these great things you guys have been doing. Do you think that they're going to be wanting to pursue mortgage freedom in the future? Talk to me about that.
Yeah, I mean, we're very open and honest about having those discussions and talking about that. Both my boys, since the time they were 14 or 15, have had Roth IRAs. One of the tools of the Roth IRA would be to potentially help them purchase a house in the future to either not have or have a reduced mortgage. So, they understand that there's give and take in everything, that, going out and getting a mortgage is not free. There's an expense to that. And I think where people get lost is on not necessarily that number that you're borrowing, but at the end of the day, looking at the calculation and what that number costs you, right? Because you're not just paying, in my case, back $230,000, you're paying $230,000 plus, right? All the interest and everything else. So that's money that could be left in your pocket. And I think, my boys are obviously a beneficiary of the fact that I'm in wealth management. So we have these conversations often, but I think it behooves everybody to have these conversations with their kids and help educate them, because I think that's the way our kids get educated. I don't think we can rely on the schools to do that education. I've been hearing for 25 years that, this should be in school, but it's not. So we have to take it upon ourselves to educate our kids. And I think there's a lot of benefits to doing that. And they'll be similar in being on a path to figure out how to extinguish that mortgage perhaps a little bit sooner than maybe the 20 or 30-year period that their mortgage will last. I
love that. Yeah. I think the education's happening more and more in school, but it's moving at government speed, I believe, over that time frame. So we should be doing it at home, everybody. And Larry's definitely showing us the way. One more question before you go, Larry. There's somebody listening and they're saying, you know what, this guy's in finance. Why wouldn't he just use that extra money to invest in his business or in the market or maybe in real estate instead of paying off a low interest loan? What would you say to that person? Yeah.
So for me, it wasn't, the interest rate wasn't really a driver for me. It was just extinguishing that debt. And for us, without kind of going into our whole financial picture, we have other real estate that we own that we do have mortgages on through the businesses and et cetera. So we are personally mortgage free, but from a business standpoint, there are mortgages out there. So it wasn't, the amount of money that we were saving each month, probably in a monthly amount, even annual amount, isn't really impactful enough to make a dent there. So we're using other methods and other means to help in those other areas, other investment areas, and building up, that moat we were talking about earlier, as far as not having the house and the home equity as our first line of defense. We're building up those other areas with other monies as a result.
I think that's fantastic. Larry, thank you so much. There's somebody listening and they want to become mortgage free like you have. Maybe they're just starting off with their new mortgage and they're just looking for some tips on how to eventually become mortgage free like you have. What would be one piece of advice you'd give them?
Yeah, I would listen. I think you have to understand, what that debt is actually costing you. Understand that, because it's not just the monthly payment. It's not the amount borrowed. Look at the amortization schedule. Look at the total cost of the loan. And, low interest rate or not, it may change your view on how you're looking at this. And, it doesn't have to be interest rate driven, low interest rate, high interest rate. It could just be from an emotional standpoint, feeling more comfortable by having that debt paid off. So, do some research, figure out what your why is. Why do you want to have it paid off? And then figure out a plan to do that. And I think you'll be successful.
I love it. Larry, you are educating people not only today, but you're educating people on your platforms. You've got a new book and you've got a lot of other great resources. Tell people where they can connect with you.
Yeah. So easiest place is if you want to learn more about the book, the first 2 chapters you could download for free. It's financialplanningmadepersonal.com, where it has links to all my other channels and ways to get in touch with me as well. But I think you'll enjoy the book and find it very helpful, because we do talk about the college savings and the path and a lot of the things that I personally went through and how we attacked it.
Awesome. Well, yeah, if you guys want to build wealth and create financial freedom for your entire family, just like Larry's doing, connect with him. Larry, thank you so much for your time today. I appreciate it.
Thanks, Andy. Pleasure.
Want to see how extra principal payments can make you mortgage free faster? Well, check out our free mortgage payoff calculator on our website at marriagekidsandmoney.com. You can access it using the links below and insert a little bit of information, hit the calculate button, and see how close you are to mortgage freedom.